Hello and welcome to today's video. If you've been watching the news lately, you know the world is in a state of increasing tension, especially with the rising conflict between the United States and Iran. And let's not forget the escalating situation between Iran and Israel. For many investors, this global instability sparks a crucial question. Where should I put my money to protect my future? This video will walk you through a comprehensive, easy to understand, and strategic guide on how to invest your money during times of geopolitical conflict. Specifically, we'll explore how the Iran-America conflict is influencing the stock market, commodities, and global investment strategies. We'll also break down tips on how everyday people, just like you, can protect their savings, retirement accounts, and grow wealth despite all the uncertainty. You might be thinking, why should a geopolitical dispute 50 miles away matter to me? The answer lies in how connected the world is economically. Every bullet fired, every sanction imposed, and every oil shipment disrupted has ripple effects on global financial markets. Iran is a significant player in the oil market. The US is a dominant economic force. When these two clash, oil prices spike, supply chains shift, defense stocks skyrocket, and the overall stock market gets jittery. That volatility creates both risk and opportunity. For example, in early conflicts, the S&P 500 has seen immediate drops, only to recover after certain military strikes ended. But for investors who knew how to read the signals, it was a chance to buy low and sell high. This is why it's important to pay attention. Historically, stock markets don't like uncertainty. War creates uncertainty. But interestingly, once the conflict is clearly defined, markets tend to recover. Think of it like this. Rumors of war, markets drop. Start of war, initial panic, clear outcome or resolution, markets recover. This pattern has been seen during the Gulf War, Afghanistan conflict, and tensions in Syria. The key is to identify which sectors suffer and which thrive. Winners in times of conflict. Defense contractors. Think Lockheed Martin, Northrop Grumman. Energy companies, especially oil and gas. Chevron, ExxonMobil, gold and silver, safe havens, cybersecurity stocks. Conflict today is digital too. Losers in times of conflict, travel and tourism, airlines, cruise lines, consumer discretionary stocks, luxury goods, entertainment, emerging markets, highly sensitive to global shocks. Here are some basic yet powerful investment strategies to use during uncertain times. 1. Diversify your portfolio. Don't put all your eggs in one basket. A good mix of US equities, international funds, real assets like gold, and maybe even cryptocurrency can help too. Defensive investing. Shift some investments into sectors that do well in conflict. Defense, energy, consumer staples, and utilities. 3. Dollar cost averaging. Rather than trying to time the market, invest a fixed amount regularly. This smooths out the highs and lows. 4. Keep cash on hand. Having some liquidity allows you to jump on opportunities when prices dip, but too much cash can mean missed growth. 5. Gold and other safe haven assets. Gold has always been a hedge against global tension. Silver, platinum, and even certain stable cryptocurrencies like Bitcoin can serve this role. 6. Consider ETFs over individual stocks. If you're not confident picking winners, go for ETFs that represent sectors like defense ETFs or energy ETFs. So where is America headed economically? A prolonged conflict with Iran or escalation involving Israel could have these effects. Inflation may spike again due to rising oil prices. Interest rates may remain high to combat inflation, affecting loans and mortgages. National debt could grow as military spending increases. Supply chains may be disrupted, especially in tech and automotive sectors dependent on global materials. But there's also a silver lining. Defense and tech innovation accelerates. Energy independence becomes a priority, boosting domestic oil, gas, and renewables. Repatriation of manufacturing as tensions make overseas dependence risky. Iran's involvement in the wider Middle East, especially its support for groups in Syria, Lebanon, and Palestine means any war could widen rapidly. An escalation between Iran and Israel is already drawing in other nations diplomatically and economically. What does this mean for investors? Oil may hit 150 plus per barrel. Global markets may go risk-off, investors flee to the US dollar, gold, and bonds. Defense spending globally could skyrocket. Build an emergency fund. Have 3-6 months of expenses saved up. Rebalance your portfolio regularly. Don't set it and forget it. Adjust based on what's happening globally. Avoid emotional investing. Don't panic sell. Don't FOMO buy. Talk to a financial advisor. A pro can help you hedge risks smartly. Keep investing in yourself. Develop skills. Learn about investing. Read economic updates. Crisis. Opportunity if you're prepared. Oil and gas investments. US oil companies will benefit if global oil supply is squeezed. Renewable energy. As countries push away from Middle East oil, solar and wind get more attention. Cybersecurity and AI. Modern wars include hacking. Investing in this space could yield big returns. Defense ETFs or mutual funds. If you're not into individual stocks, get exposure through funds. Gold and Bitcoin. Both can hedge inflation and currency instability. Real estate in stable countries. Consider diversifying with property in countries like Canada, UK, or Australia. From the Cold War to the Iraq invasion, global conflict has always shaken markets in the short term. But in the long run, economies adapt and recover. The winners are always those who stayed calm, informed, and strategic. So, is the war between Iran and the US something to panic about? No. But is it something to be aware of as an investor? Absolutely. This isn't just music to your financial future. You don't need to be rich to protect your wealth. You just need the right information and the courage to act. So start today. Review your portfolio, diversify, invest smart, and most importantly, stay calm and stay informed. Thanks for watching. If you found this video helpful, give it a like, share it with someone who needs to hear this, and don't forget to subscribe for more insights.